What's going on, everybody? Julian here doing a post-market recap. Going to start off with the S&P using the SPY that tracks the S&P 500. And what I want to show you on this particular chart is something very interesting that we've been seeing over and over and over again. And most recently, as in today, price action has pulled back and we have found some 50-day simple moving average support. We saw it here. We saw it again through here where price action came down, couldn't hold the move, and then the market wanted to get long again, took it right above, closing above the 50-day simple moving average. We rallied and then pulled back again. So there was a bit of a bear trap right through here. You can see that we had this trendline resistance pushing price action lower. We had some support levels that broke down and then immediately got back into that range. Now, what we're looking at right through here on a longer term basis is a pattern that's referred to as an inverse head and shoulders. So there we have the left shoulder, the head, and we are now about halfway of producing the right shoulder. Now, when you get these inverse head and shoulders patterns, they are bullish, and based on what momentum is doing and if the market steps in, that inverse head and shoulders, if it breaks based on a measured move, which I won't get into now, could run as much as 5%. Now, 5% from the top of this all-time high right through here would take us into the $420 range on the SPY, or you're looking at 4,200 on the S&P 500. Okay, so markets again, they're still looking good. And remember, when we see these days where price action is moving to the downside and we get some selling, please don't confuse that with a sell-off. That is not a sell-off. We are not in a bear market. Bear market is 20% or more to the downside off of its previous highs. We're getting into a recession. You just see multiple quarters of negative growth, and we're just not there. So with respect to the price action on the SPY specifically, we are building an inverse head and shoulders pattern. It's not complete. If it does complete right through here, like I said, we could see, based on a measured move, as much as a 5% move to the upside, taking us to roughly 420 on SPY or 4,200 on the S&P 500. Now, with that being said, if we look over here, excuse me, on the day trading side of things, I was moving around a little bit, trying to look for some stuff. There wasn't really anything that I could really sink my teeth into. There were some movers, but just because something's a mover doesn't necessarily mean that it's trade worthy. And a lot of the stocks that I was looking at on the low float side were not producing great patterns for me. So if I don't see my pattern, despite the fact that something's moving up, I don't bother with it. Something has to be moving up. There's a very specific criteria that I have to follow. And if I don't get that, I don't trade. So there was a portion of the day where I had to just step away from the low floats, manage some of the optional stuff that I'm involved in, and really hunker down and see what was going on there. And really, ultimately, the big one that I was watching is AMC. Now, I want to be completely honest and open about this. I am not a hater of this stock. I don't like the stock. I don't hate this stock. I just don't like some of the hype behind it. And I don't like the lack of discipline that a lot of people are executing with this stock, GameStop, Nokia, BlackBerry, etc. But with all that said, this was a great short for me. And today I was forced, based on price action, to get out of this trade. So I'm going to walk you through this one. This is a complete trade review, and it starts back here. So we had this 12% gap down. Price action did rally just like this. And as soon as price action snapped to the downside, I started shorting. Now, on the very, very day that I got short, there was a bit of a relief rally, but it did produce this rising wedge. The lead-in trend was bearish. So I thought, you know what? I'm going to hold this into the close, see if we can gap down, and we absolutely did. And this thing just kept stepping down lower, lower, and lower. Now, today, this is where things got a little bit tricky for me as a somebody that's short AMC. Now, I'm short with options. I've got put options. I bought in the money when it was breaking down, $13 puts. So I was in the money, and I was just getting deeper and deeper and deeper in the money. This point down through here, I've got a lot of intrinsic value. I've got time. I'm deep in the money. I've got a cushion here that I can sit on and surf any sort of gaps against, right? So what I was facing and dealing with today was the fact that we had this price action movement down through here. I was looking at it as a continuation move this way. So if price action dropped, it consolidated a little bit, opened up higher. I don't want to say expectation, but my thought process was there's going to be a little bit of a relief rally, and then price action is going to roll over and step down. Where I thought that was going to happen was somewhere in this area right through here, simply because it put in its initial high and then started to step down. If this level right through here would have cracked lower, 912, if 912 would have cracked to the downside, what is that, 882, that would have been tested for sure. And if it didn't hold, we would have stepped down to the next level. Now, on the other side of things, I was looking at this level right through here. So this is a support level. It breaks down. We've got a new support level. Rallies, pulls back. We got a new support level. Now what we're looking at is a double bottom, okay? And this is a bullish scenario. We've got a double bottom on the back of a bearish lead-in trend where the last 2 and 3 days was violent selling. Okay, we're seeing this stock trade lower 15 and 16% per day. That cannot continue on the short side. I'm very aware of that, and I'm very aware of the fact that relief rallies can come in and squeeze all the short traders, myself included. I know that. So with today's price action specifically, I had to look at this from a position of, if a technical level is tested and it doesn't hold, I have to get out. It's just that simple. So I gave it enough room to prove this area wrong. But the fact of the matter is, if this prior support level was taken out, held, and rallied, I needed to get out. It was just that simple. So what happens here is price action tests it, comes back in the range, and then moves. And by the time it comes back in the range, I'm already out. So I was out when this level broke. It was a non-negotiable structural level that I needed to just take my position off and walk away from the market. Now I want to say this. This is up 23%. I mentioned this yesterday and the day before, that AMC will probably rally, because just like on the long side, something can't continuously go up higher and higher and higher to infinity. It just can't. Is it possible? Sure. But it just can't do that. And the same is to be said for the downside. So when you're trading, whether it's long or short, it's imperative to have price targets where you're willing to get out of the trade. Fact of the matter is, when I got into this trade over here, if this would have moved higher against, this level right through here at 1324, I would have gotten out then. Those are the technical levels. Why did I keep short this? Because levels just kept pushing lower and lower and lower, and it gave me every reason to stay in. But this was the reason to get out today, and that's exactly why I did. I am completely neutral to all trades. If I look at something long or look at something short, I'm neutral. I don't have a bias. If something is going to present itself a long opportunity, I'm not biased. I just look at the technicals and I do what I do. Same for the short side. In the case of AMC, this reversed on me. Had a double bottom. That's bullish. It's creating a double bottom and holding a support level after a ton of selling, which suggests that there's got to be a relief rally and the momentum shift. Okay, so it's not a big deal for me to get out of this trade and move on. I did roll the profits over into another short, which I'll be talking about in the next few days. But I do want to tell you this. This is a double top, which is bearish, and it pushed price action much lower. If we look at this pivot point and come all the way down to where price action bounced, you'll start to see that there are key levels on the Fibonacci's, the 382 and the 50. You'll notice right through here that there is some resistance. This is a little bit messy, but you're dead smack in between those two Fibonacci retracement areas. At the 50 mark specifically, this is a very, very normal place for price action to touch and then roll back over. The way that I'm looking at this at the moment is that you could say that there is some trendline support that has been broken right through here. Price action in the after hours market moves sideways. One could say that maybe this is another level to break, and one might also venture off and say that while price action has been moving up, momentum has been moving to the downside, offering us some bearish divergence. So, what are my thoughts here? I don't have any yet, but AMC specifically, I'm going to keep it on my list. If this thing starts to crack these trendline support levels and then gets below the VWAP, rallies into the VWAP, and now the VWAP is maintaining some form of resistance, there might be a case to get back into the short side. Just an idea, but again, it's something that I'm going to have to watch. I'm not a hater of AMC. I'm not a hater of GME or GMC or whatever the other symbols are. All I'm saying, guys, do your due diligence. Make sure that you're putting on a trade that fits your strategy. Don't go into this blind. Whether you learn how to do this from me or somebody else really doesn't matter as long as you do it. This is not the place where you want to gamble, okay? So if you have any questions, please feel free to reach out. But that is my recap on AMC, and I'll keep you completely in the loop with what my next short is once I'm done the trade. I'm currently in it right now. It was looking good. Levels did break, but it came back in the range. I really got to figure out what's going to happen tomorrow. So when the market opens, if it gaps down in my favor, I'm going to stay short. If it gaps against me, I'm going to get out. Either way, I'm going to do a review. Stay tuned. See you then.